Hey traders, Raghi here, and in this discussion we're going to dive into gold once more and just sort of put a ribbon on this current series that we have discussing both from the big picture view of gold now down a little bit more granularly to a setup that we've seen. Now gold has been, let's begin this discussion with acknowledging one really basic part of gold, and that is gold has been in what we call the yellow market trend. In other words, you can see this right at the very bottom here, the lower color of the rose, the JT multi, it's yellow. That tells us that since mid-June, gold has not been trending. Non-trending markets have different characteristics and oftentimes more volatility, and that can be seen very easily with these two sell-off candles that occurred here in the beginning of August. Now, at the end of the move, right, everybody wants to step in and buy gold. Even I'm looking at where is that pause. Now, here's what's really important, and this has just as much to do with gold as it would any kind of market that has a sudden, swift, upper end of the daily price movement range sell-off. Now, just to remind everybody what a DPMR, daily price movement range, is, it's the typical historical, right? We're looking at a 6-month look back, historical price movement range for the session. When a market exceeds its DPMR, it's moving in a way that is not the usual. And hitting the pause button and waiting for the market to sort of gather itself, collect itself, is warranted. So to be prudent, we wait for a really simple little pattern. Right here, we have what's known as an inside candle, or an inside day, or to Japanese candlestick fans, it's a harami. It's a small, squat-bodied candle that is inside the previous session's high to low range. Now, when we have a sell-off like we did that preceded this little, right here, inside day, inside candle, harami, I prefer that harami to be no higher than about the midway point of the range, which you can see was in effect here. So it just shows the market is taking a pause. The buyers and sellers have calmed down, and now we can look for that next leg of movement. Now, because gold was a buy before, and quite frankly, we haven't gone double red on the JT multi, I'm still looking for a buy again. So what we need to do is look at the high and low of this inside candle range. So we're going to identify the price and wait for either a breakdown, which means the bears have won, or a break to the upside through resistance, which means the bulls have won. So either way, what we have is a small candle that will either validate the buy or it won't validate the buy. So it's a very binary look at the market after a dramatic sell-off. So let's go back to some of the big picture conversations that we've been having here at the Countdown Trader about gold. Is the real yield still moving, generally speaking, in a way that's bullish to gold? Yes. Has the dollar been moving in a way that could let gold move higher as long as the dollar isn't punching up to higher highs? That's in play as well. And ultimately, what we will probably see is gold try to retrace some of this loss of ground and find another midway point. And why would that be the most probable outcome? Because since the middle of June, that's exactly what gold has been doing. Just finding a middle ground and operating within that, allowing traders like ourselves to buy the lower end of the range and take profit at the upper end of the range. And just sort of rinse and repeat, doing that again and again. Yes, this particular move did disrupt that tiny range, but again, given time, we can see this pattern let us get long again, and we'll look for gold to find a new range.